Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today we have a guest, a very special guest, a GW Investment Institute Advisory Board member, Mr. Greg Wong. Mr. Wong, welcome to the show.
Professor Lake, great to be here.
Well, I'm so delighted. One of my goals for this year is to get as many of our advisory board members on as possible. Our governing board chair, Mr. Russ Ramsey, which you have an interconnection with, was on the show. Mr. John Roberts has been on the show. Delighted that you're here today as well. And a shout out, which you got a shout out for GOAT, you and Russ, for Mr. Dan Ives. Thank you for making the connection for the show for us and also our conference. It really worked out. And I would say a big shout out to Dan Ives, who was very generous with his time. So thank you, Greg, for making that happen for us. It was really a delight to have him on the podcast and to have him on campus and meeting with students. I think it really worked out super well. So thank you very much.
No, it was wonderful to have him, here at the Institute, his insights and his dress.
Exactly.
It is really something different.
Oh, it was such a treat. And again, we really appreciate that you, put up your hand and said, hey, I can make this happen. And you did. And again, he also gave you and Russ shout outs for GOATs if people are listening to the episode on the podcast. So again, thanks very much. And one of the things that, the connecting piece, and we'll talk about this in your background here, is Russ. But we also want to say a big thank you for being on our advisory board for the Investment Institute. Just so people know, people that are on our advisory board, are people in finance, people who are alums. So that gives away part of your background. But it's also people who think well of what we're doing, think that we're doing something consequential, think that what we're doing it matters to students and can help them along their way. And so we are grateful that you're part of that. And people put in the 3 W's, the wealth, the wisdom, and the work. You're doing all 3, which we appreciate. And it takes all 3 to really make something effective at a university. And again, very grateful for your impact at the Investment Institute. So now let's dive into your background. So we know there's a connecting piece in there to Russ, as I mentioned a couple times, and Dan mentioned as well. But maybe let's start a little bit before that. Educational background, undergrad, grad, and we'll get into professional.
Sure. Grew up in California, went to school at Notre Dame.
Nice.
And all the way in Indiana. Different
That's a
weather.
long haul. Yeah.
Different weather.
Very different in California.
It was a Navy ROTC.
Excellent.
And was focused on computer science when I was there. The Navy actually sent me here to Washington, and that's where I had a chance to work for a 4-star admiral in the Navy's nuclear program.
Very cool.
So called Naval Reactors, and that was a wonderful experience.
But how long were you there?
Well, I was there for about 5.5, 6 years.
Okay.
But I had a chance to get my MBA here at GW.
Excellent.
And as I mentioned, I was a computer science undergrad and coming into the business school.
Well, let's stop right there 1 sec. So just to memorialize this, so you're coming from California,
right?
You're basically working your way east a little bit, right?
Yeah.
South Bend and then to Washington, the connecting piece there being ROTC, the Navy, and then into Washington. Mm-hmm. But how did you decide, you're 5 years into the Navy, what was the decision around, I think I want to go to business school?
Actually, I thought I was going to go to law school.
Oh, wow.
Because back in undergrad, probably 3 of my 4 closest friends, they went to law school. And by the time it was my time to enter in, they had finished their law school. They were associates at law firms. And they said, don't do it. Being a lawyer, well, this sucks.
In hindsight, this turned out to be great advice.
and actually part of it is I was actually going to get my MBA and then maybe think, maybe I'll become a corporate attorney. So I'll get an MBA and
a JD MBA.
You're right.
Yeah.
And no, so I decided, well, I'll just do the MBA.
Got it.
And that's when I focused on finance.
Excellent. And how did you make that determination?
Well, because actually when I was in the Navy, I had a very unique job. My job was to work with the appropriations committees and the armed services committees on behalf of the program to get what we wanted accomplished. And that involved literally billions of dollars.
Right.
And that's money.
Right.
And I will tell you, the people who have the most control and power here in this country is actually the appropriations committee.
Correct.
Those professional staffers there. Because everything revolves around, if you have a plan, if you don't have money, you're not going to get anything done.
Doesn't work, right?
And so that's where a lot of things happen.
Great experience, yeah.
It was phenomenal experience, and that kind of perked up my interest, and then also just the markets and investment in general was something that I was interested in.
Yeah, and when you talk about, Steve Jobs talks about connecting the dots and looking back, and certainly when we look back, and we'll do it a little bit, obviously that piece of your experience obviously was very consequential in making you a successful investment banker.
Right. Well, you had to take, what the program's accomplishments were and what their goals were, pitch it, make sure that the people understood it, and then they gave you the money and you can go execute.
Right.
Just like an investment banker.
Same deal.
You say, here's the company, here's what they're planning on doing, here's where they're going to be going. Give us your investment and we're going to give you a return. So it was very, very similar path.
And big numbers, and really important, and consequential deals happening, and so great experience. So we jumped ahead a little bit. We'll come back to it, but now talk about your time at GW. Obviously, you're here in Washington, so it makes sense to go to GW. We talked a little about you chose finance, but talk about your time on campus and talk about the culmination of your degree.
Well, I mean, first of all, it was great. It did open up to experiences or perspectives I hadn't had. I will tell you, one of my most interesting classes was microeconomics.
Nice.
And that's actually where I learned everything is about supply and demand.
Right.
Everything, whether it's not just the stock market,
Everything.
It's not just the food, it's, trying to get a job, it's buying a car, it's everything. And so that was a class that really kind of, it's like the Matrix.
Yes.
Where you kind of look at it and you see all the code. Now I can actually look at the world and all I see is supply and demand.
Right. It's foundational. Yeah. And certainly when you're coming from a computer science undergrad, and having that, it's probably a big, foundational piece to set you up for finance. So you did your time here. Could you maybe talk about, how you made the connection? So, I know you went to FBR after this, but talk about that. That seems like a big jump. Obviously you're in business school. I'm sure you had plenty of opportunities to do other things, stay in government. How did you find yourself getting a job at FBR?
Well, actually, the Naval Reactors wanted me to stay on full time, become a civilian.
Right.
And, I thought about that, but it was something I wanted to do something more. I wanted to do some things different. I thought about had opportunities to go to M&A and corporate. I had a chance to go into finance departments in another tech company. But it was here at the Beta Gamma Sigma reception where the keynote speaker was Russ Ramsey, founder of our, GW Investment Institute.
Right.
And he was young at the time, and he was talking about his investment banking firm. And he was going to be starting up a technology investment banking group. And given my background in computer science, paired up with the finance, he gave me an opportunity that, I jumped at. And it turned out to be one of the pivotal decisions in my life.
Absolutely. And so, number one, that's a fantastic connection. And that's an early days, part of the tech world at that time, and in early days at FBR. Could you maybe talk about, and I think you did about 11 years there, approximately, maybe a little bit more, at FBR. Could you talk about, your time there and sort of the kind of work that you were doing, a big adjustment going from being, working on naval reactors to being an investment banker in tech, which was booming at the time?
Well, like you said, it was, when you think about in the late 90s, there were really only two key places in the United States where technology was really happening. It was out in Silicon Valley, and it happened to be here in Washington, D.C., because you had UUNet, you had AOL, you had these companies, and then it blossomed into many, many, many software and internet companies. And so when I think about the opportunities I had early stage, you're dealing with companies that, had just a handful of million of revenue and doing things that people have never done before. And be able to communicate that story, on the one hand, is very exciting.
Yes.
But it's also, you really are breaking new ground.
Which I'm sure was great fun.
It was. It was wonderful. Able chance to be working with CEOs and CFOs of these, up and coming companies, talking to boards, advising them, going public, buying companies, selling their company. And so it was just a wonderful experience, especially at such a young age.
Absolutely. And to pause here a little bit, or maybe let's explore this a little bit more, especially for people who are watching this, who might be students or people who are thinking about transitioning in their careers. What advice would you give to people who are interested in being in financial services or specifically investment banking? what are some of the takeaways that you learned during this period that you could tell other people? You have to be good at a few of these things if you're going to succeed as an investment banker or succeed in financial services.
Yeah, well, I think number one is to be able to really listen. So as you're young, when you're in meetings, watch what other people are doing. Watch what the senior people are doing. See what you like that they're doing,
Right.
and what you don't like, and just kind of form your own methodology. But when it comes to really making a difference, just do a great job. Do it, what your boss
Right.
really wants, and be reliable. You do those few things, gather that experience, they're going to want to move you up.
Right. You're going to be successful.
Right.
I mean, but they talk about foundational. Those are foundational. But I think some of those are kind of a lost art nowadays. And I think, mentioning those things is super important, especially to young people, being
Right.
reliable, showing up on time, doing the work you
It's
said you were
actually
gonna
not
do.
rocket science,
Right.
right? But if you can do that and can do it consistently, then that's the people that they're going to give more and more work, the better and interesting opportunities, and they're going to count on you to make a difference. And having those opportunities will lead you in places that you want to go.
Now, are there any specific stories, or maybe it could be something general from your time at FBR before we move on from FBR to your next role? Could you maybe talk about, something in particular or something in general that really stood out to you from your time at Friedman, Billings, and Ramsey?
Well, again, it's if you get into investment banking, you really get to do things that a lot of people, don't. You get to
Right.
get exposure to senior management
Yes.
at these great companies. You can see some that are wonderful, and maybe there's some you go, well, maybe
Right.
they should be.
You have a big comparable set.
Do things a little differently. But look, it's never as good as you think it is, right? When things are going wonderful,
Yeah.
it's not going to stay that way. And it's actually never as bad as you think it will be. When you're having a hard time, the markets just collapse. I was there during the dot-com bubble.
Yeah.
that
Tough time.
that was a wreck. And people can get very, very distressed, but just understand that things move in cycles.
Right.
And by doing it long enough and seeing enough exposure, just keep that in mind. Again, it's never as good as you think it is when it's going good, and it's
Right.
never as bad as it is when things aren't working out. Things will work out over time.
Excellent. And now, so let's, and we may come back to some of this, but again, great connecting thread here for FBR. Again, even back to Dan Ives' episode that we just had. So next up here, so you're at FBR for about 11 years. You decide to do something else. You move on to web.com. Could you talk about how that came about and that transition?
Actually, I was enjoying what I was doing. I was a managing director. I ran, a big group within the technology area. I was allowed to basically manage my clients.
Right.
And once you're in investment banking, you don't get out. Well, if you get out, it's hard to get back in.
Right.
And so, but I had a client of mine. At the time, the company was called Website Pros, and it was down in Florida. And the CEO and founder was a guy by the name of David Brown. And he was actually one of the partners at Carlyle, the private equity firm. He had retired relatively young, moved down to Florida, and started up a company to help small businesses use the internet to grow their business. And at the time, and even today, still navigating the internet and putting on a web page and social media and being found in a local search and all those things are,
challenging for small companies.
Well, it's not their focus, right? If you are a roofer, you know how to put on a roof, right? If you're a plumber, you're wonderful at putting in piping,
right?
But how to do this? So our company, or the company started, focused in on that, and so I had an opportunity to raise private capital for them.
Nice.
Led their IPO, bought a couple companies for them. We actually bought a company called Web.com.
Nice.
Took their name. It was a better name.
It's a pretty clean name, yeah.
and one day when I was down visiting, trying to talk to him about, well, here's our next set of acquisitions, he said, why don't you come on board and be essentially the in-house investment banker?
Nice.
And I originally told him no.
Okay.
Because loved Washington, D.C., was in a good spot within the firm. But I had young kids.
Okay.
And, when you're working in investment banking, it is long hours.
It's intense, right?
And it really is 6-7 days a week. And so I thought, what better place if I was going to take a jump,
right,
than my favorite, CEO. I loved the company. I felt like it actually did have purpose.
Yeah, absolutely.
Right? You were actually doing some good.
Yeah.
And it was Florida. So I gave it a shot and turned about to one of the, big and really fulfilling decisions I made.
Nice. Well, and maybe just a second on, maybe more than a second rather. Let's talk about your time there. And so, help people distinguish the difference between, you're an investment banker at a firm, an investment banking firm, FBR, and basically you're the in-house investment banker at a company, Web.com. What are the similarities and differences there?
Oh, great question. So a lot of the activities are the same, but how it goes about. So when you're an investment banker, you have 5, 6, 7 deals all going on at once,
right,
at different stages. Some are wrapping up, some are getting started, and they could be a buy-side mergers and acquisitions. One could be a secondary equity offering. They could be a variety of different things.
Right.
But you're jumping between client to client, and some deals are going really well, and some deals are not. There's something. The market's taking a little bit of a swoon for that moment. Maybe they're trying to buy another company, and the other company, someone else is trying to buy them, so you got a bidding war going. So there's a lot of things moving on, a lot of different parts. But when you go in-house, you still get to do a variety of deals. We did, over the entire course of my time working with them, probably 17, 18 buy-side deals. We did many financings between equity and debt and convertible offerings and term loan A and term loan. These are all different nuances of debt. And but the difference is, when you're doing a deal for clients, you get one done and then you kind of have to move on to the next one. When you go in-house and you buy a company, you own it.
Right.
Right. There is no more pivoting to another client. Everything you're doing. And oftentimes, at Web.com, every employee was a shareholder.
Wow. That's very interesting.
That was a wonderful thing that David and the board did, is that every person, had options. And so when you're trying to make a difference, you're always trying to keep in mind, is the deal I'm doing actually going to be helpful, not just to the customers, but also to the shareholders and all my colleagues. Right. And so that's not something you can hide from over time. Because I always said, I can do a lot more damage by doing a bad deal than the benefits I would do from a good deal. So you take it even more personally, and making sure that what you're planning on doing is going to be moving the company in the right direction.
Great. And I think there's some lessons learned to share here too. So thanks for sharing that. I think that's very enlightening to talk about the differences between those two positions. While they're very similar, they're also quite different. And the structure of that company is also different. So talking about that, like internal to the company, how did you decide on these deals? Obviously, when you're an investment banker, maybe you're pitching deals, deals maybe coming to you, but you're the in-house investment banker. How do you decide, okay, we have these 3 or 4 ideas, or how do you come up with new ideas? How do you decide how to prioritize those deals? And is it you and the board? Is it you, the CEO, and the board? How does it work at that level?
Right. So we probably had 2,400 colleagues, and I ran the corporate development department of one person, intentionally.
Okay.
Intentionally. So every deal that happened, I knew inside and out.
Right.
So when I'm sitting in front of the board saying we should do this, here's how should we go about it, I can answer every question there was, whether it was about sales and marketing, whether it was about technology. I didn't turn to someone on the team and say,
hard to turn to someone they're not there.
Here's something. Now, again, had a wonderful set of colleagues. So when we needed finance, the general counsel and his team are on legal, he took care of that. Our CFO, another wonderful guy, and his team, they would do accounting due diligence, and all the other departments were all part of a team.
Got it.
But I made sure that when it came to figuring out the deals, working with the deals, I would basically go across the hall to to the CEO's office and say, here's another set of companies that we
Right.
should be looking at. And basically you track a whole variety of opportunities, because it's not just about us. You need two parties
Correct.
to get a deal done.
Takes two to tango.
And so timing has to be right for us, but it actually has to be right for them. They may be planning some operational things or strategic things that it's just not the right time for them.
Yeah.
And so the idea is it was kind of like dating. You would get to know them over time, and when the timing was right, I always told them it's a Venn diagram.
Right.
We have our goals and what we can afford to do, and they have their expectations. And if we're apart, we're not going to get a deal done.
Right.
But when the time comes that it does overlap, that's when you got to move.
That's when things come together.
And that's where we really waited for those times and be able to execute.
Now, for people who maybe don't know, how do you prospect for those deals? How do you find them?
Well, the good thing is because we were focused on small businesses, that was my number one criteria. Tell me about your customers. Say, oh, we do this great work. We're working with this healthcare group, or we're focusing on manufacturing. I'm like, okay, that's great, but that's not what we do.
Yeah,
we're here to help literally the small businesses. And so by using that filter first and foremost, that was a big difference. The other thing was we were really big in recurring revenue.
Okay.
Big fans, right? And because frankly, small business customers, they don't have big checks.
Right. But they could have recurrent.
But if you deliver value, and more importantly, you actually use your service to get them more business, they're going to not only be with you, but they're going to stay with you. And that was, by just doing those two things, it really narrowed down the list.
And so the whole time you're doing this, is Web.com a public company the entire time?
Well, it originally wasn't. And then, but when I moved in-house, it had been a public company probably for about 3 years at that point in time.
Great. Thanks for bringing that up.
Mm-hmm.
And the reason I'm asking is then when you're doing these deals,
Mm-hmm.
many times you're buying private companies
Mm-hmm.
and taking them be part of a public company.
That's right.
Could you talk about the differences there? And we talked about recurring revenue. Obviously, the market likes that,
Mm-hmm.
so you're getting a higher multiple. Is that part of the arbitrage that sometimes you could get? Or, were some of the companies that you bought public? Maybe talk about the differences between buying a private company or another public company.
Well, there's really kind of two or maybe three lenses that I used when we were looking at companies. One is, does it add us more customers? So to market to small business customers on a per customer basis is actually pretty expensive.
Yes.
And so if someone had already had a set of customers, hundreds of thousands, millions, we bought a company called Network Solutions, which was at the time, one of the largest domain name companies out there. And that added us a lot of small business customers. But we were really big into upselling and cross-selling.
Mm-hmm.
What does that mean? That means small businesses, you can build them a website, but then how about add some marketing?
Yeah.
Or let's add some email marketing, or a variety of different products. And then what you can do is, when I looked at a second set of merger and acquisitions targets, is did they have a solution that when we had our 5-6 million customers, could we sell into them that solution? And then international. We bought companies in Argentina, in the UK, we had up in Canada. So we had a variety of international operations and was planning on expanding even further.
Nice. Well, and maybe to wrap up this part, to talk about this is, you're no longer there.
Mm-hmm.
So maybe talk about, your time wrapping up there and what was your exit? Look, what did that look like?
So yeah, it's been about 5 years and it was unexpected. So as an investment banker, I've always known that most companies will get bought. It's just a matter of time.
Right.
It's when and who and how. And we were continuing to execute our plan, servicing the market. But I also knew, I told clients that the day you go public is the day you're for sale.
Yes.
All a buyer has to do is basically offer the board of directors a deal they can't refuse.
Correct. And they have a fiduciary responsibility to consider that.
To follow through.
Right.
And so one of the things at Web.com we believed in was actually making money, making a profit.
Which is an excellent plan.
Which actually sometimes in the technology world at the time wasn't
always the
vogue,
focus. Yeah.
Right. But that was a very important part of our DNA. And so what is that? That did attract people who were interested in acquiring the company. And so it was one spring day that we got an offer that was substantially higher than what our stock price was trading at. And from then on, through a series of events, we actually had a bidding war breakout.
Okay, excellent. Good for you.
Well, and good for the shareholders,
Yes.
right?
Everybody.
But the company wasn't for sale, but we did get bought, and it probably happened a few years earlier than I anticipated.
Okay.
But it was a good exit for those involved.
Absolutely. And again, sounds like great for shareholders, as you mentioned. A bidding war breaks out. That's great for the valuation. Fantastic. Well, and congratulations on that. Now, you said that's about 5 years ago. So how have you, other than the investment advisory board at GW, what has been the time, what has it been focused on since then?
Well, for 28 years, it was many, long days,
Right.
long nights. And it was an opportunity actually to take a break. So do a lot of traveling nowadays, international travel.
Any favorite places?
Oh, I love Japan.
Nice.
Japan is wonderful. If you like, landscapes, there's parts of Switzerland that are just majestic. And probably one of the prettiest places I've ever seen was diving in the Great Barrier Reef.
Oh, wow.
It does look like, if you've seen the movie Nemo.
Yeah.
It really
That's
does.
what it looks like.
It looks like that. I mean, it's shocking.
Excellent.
So
And so traveling a lot, taking a little bit of a break. Are you doing any investing on your own now?
Well, one of the big things that because I'm not working and haven't been for a few years, you do think about where you can deploy capital.
Right.
And a big fan of private equity and finding, if you can find the right people that you can work with and invest in, that's where I think you have the right risk return characteristics. I'm a big fan of capital preservation at this stage of my life.
Absolutely.
So do focus in on things that are more real assets.
Yeah.
And that's probably a big part of the portfolio. Some of them multifamily, some of them are industrial.
Yeah.
Some are built from the ground up. Some of them are remodels. So I don't do the direct investing myself. Like to be part of a group that actually are experts in what they're doing.
Right.
Evaluate them, work with them over time. Build trust and confidence in them, and let them do their thing.
Right. So now I moved on to being a capital allocator.
That's right.
Excellent. Well, we wish you all the success with that. I'm sure it's already working out well. So now transitioning into maybe some business lessons learned. We touched on a couple already. One of the things that you've said before to our students is that in business, everything is negotiable. Could you maybe help listeners and viewers understand what you mean by that?
Well, oftentimes people are said, this is the way it is, and this is the way you need to follow. And when I think about it in many ways, well, one is, just because there's rules doesn't mean that you can't adjust them. You need to find out on the other party, what is it that they really want?
Right.
And if you have something that you really want, have a discussion. For the upcoming graduates, here's an offer. You're going to work here. You're going to do this job, and this is how you're going to get paid. And that may be a wonderful offer, but you might say, you know what? I want to take the summer off and travel Europe. Okay. Remember, they want you.
Right.
So just go back. I'd love to join your firm. I'd love to work in this job, but I need, 8 weeks before I can start. Or if you're going to be moving to Chicago, New York City. It really would be helpful if I could have a little extra just to set up my apartment.
Right.
And all you got to do is ask. But if you understand that they want something and you have something to give them, it's worth a discussion.
Right. That's great advice. Next piece of advice here is on networking. You talk about networking creates opportunities. Could you maybe expand on that a little bit? And what advice could you give to current students or really anybody in the professional world?
But that's what it really is. I mean, we talked a little about how you can advance your career, how what are some of the lessons you can learn. But it's the people that you meet that will create those opportunities to do things differently. We talked about Russ Ramsey earlier. We talked about David Brown, but it really is, had I not had that networking opportunity,
Mm-hmm.
I wouldn't have had the chance to get to know them and them get to know me, which then would have led to those professional opportunities.
Absolutely.
And so networking, it's about people. At the end of the day, people hire people. That's what you can look at a resume, but they all kind of look
at a certain point,
same.
they look similar, right?
But it's when you get to know the person and you build a connection, that's where you go, that's somebody I'd love to have on my team, or that's somebody I would like to work with. And so get in front of people, get to know them, and that really will make a difference.
Excellent advice. Now, extending on the advice here, one of the other parts that you offer, and this is not just your advice, but you talk about know thyself when we're talking to current students, and I think again this is applicable to anyone. But maybe you could extend, advice here. Like, how should people think about know thyself?
Well, again, when you're younger, there's a lot that you actually don't know.
Yeah,
and I didn't know about myself how much I enjoyed doing deals, doing finance deals in particular. But it was something that I got to expose to and said, this is something. The light bulb went off. Look, life's too short.
mm-hmm.
And you got to find out the things that make you happy in life and go do those,
Mm-hmm.
right? It's no fun to go 5, 10, 20 years being miserable.
Right. Something you don't like.
It's not.
Yeah.
Find out what you like. And part of it is also finding out what you don't like.
Yes.
Right? Especially you're younger. I thought I was going to be an aerospace engineer until I figured out what they actually did. And I'm like, I don't want to do this for the rest of my life. And there's people who love doing that.
Yeah.
Good for them. And I think that's really important, is to find out what makes you happy and go do that. And if you do that, success will follow. You'll have the right opportunities. You have the right job. You have the right salary. It'll come to you, but you got to figure out what's going to make you happy and go do that. And it can change, right? The course of your life, I expect probably you're going to be in places you never thought you'd be, doing things you never thought you would. That's cool. That's all part of this journey.
And some of the other things you've mentioned in the past, and you're nice enough to come back and talk to our students and guest lecture. Thank you. But you talk about the importance of having some mentors. Could you give, again, particularly, people maybe coming out of school right now, advice, but I think it's applicable to anyone, the importance of mentors.
Well, oftentimes it could be your boss, because they hired you, they're working with you every day, but it could be somebody else. It could be a relative, it could be a professor, it could be even a colleague,
right?
A more senior person who's been around the block a couple times. It could be a variety of people, but they are going to be there because they have an interest in your success. And a good mentor is going to not only help you with the things that you're doing well, and encourage you to do that, but also saying, hey, here's some areas you need to work on, or you should really step out and take a risk to do something that you weren't comfortable with,
right?
And to help you grow. And so I would look for those mentors as you go through your path.
Next here is you talked also in class about, we have a plan. And you mentioned having a plan about being an aerospace engineer. And you say expect it to change, which you mentioned. Could you maybe double down on this? It's not that you don't plan at all,
right,
but you have to be nimble.
Yeah. I never thought I'd be in Washington, D.C. and the Navy. I was lucky enough to get selected for a very special program. And that was, a unique opportunity and something I had not planned on. Never thought I'd be in Florida.
Right.
Again, had I not met my client down there, he, gave me an opportunity to come down there, and never thought I'd be there. Life's going to take you in many, many different places. It's not just jobs. It's the the people that you meet. And what I would say is really don't get too hung up on here's exactly what I'm going to do for the next
Yeah.
30 years. Because I can guarantee you it won't turn out that way.
Yeah. And opportunities will be whizzing by.
And
and you-
there are things that opportunities you never expected to come, and there are going to be challenges, right? Some of them could be professional, some of them can be personal, some of them can be relationships, some of them could be health. And a lot of different things will change along that path. But the good thing is, do have a plan in terms of where you are going, at least for the near to medium term. And maybe even have some long-term goals in life, but just know that it's going to change. And that's actually part of the fun.
Exactly. And you just mentioned, health, and many times you've described this as health over wealth. Could you maybe explain your feelings about that?
Those are some deep personal feelings because I'm really not supposed to be here. It was a few years ago, was in phenomenal shape and was just getting a checkout with my cardiologist. So I had a plan. So when I got old, I could compare it to.
Right.
And it
Baseline.
The baseline. It turned out that my LAD, which is the widowmaker, was 99% blocked.
Not good.
Not good at all. And shockingly was still walking around. But we caught it.
Very
and
lucky.
Had the bypass surgery, which I will tell you is not fun at all.
I doubt that.
But it's part of the reason why I'm still here. And it didn't change my perspective on life, but it did reinforce the idea of, again, do the things you want to do.
Right.
Be with the people you want to be, and enjoy the journey you have, because you don't know how long it's gonna be. But try to make a difference along the way.
Absolutely.
Right? Beyond just yourself. And so whether that's at work, that's with society, it's with your neighbors, it's with your family, try to make a difference.
No, look, we're all lucky that you had this insight to get this baseline.
Right.
Obviously, number one, including yourself and your family, but certainly lucky. We feel very, lucky at the Investment Institute because we connected, afterwards. And so thank you very, very much for that. I think, look, this has all been fantastic advice. I think for certainly young people, for students, for anybody that's watching on YouTube or listening to the podcast, I think this is all relevant. And I think it's also really important what you said about that this experience you had, which was a very, intense health scare, and again, got lucky to catch it and get over it. But it then reinforced the things that sort of increased the conviction, the things that you already had. So I think that's super important to think people, you don't need this life-changing, hopefully everybody doesn't need that.
Right.
So learn from others, as Ben Franklin would say, and in this case, learn from Mr. Wong, and sort of the things you might like and don't like. Okay, now double down on those things. Like you said, you don't have to have the life changing experience in the health category to make sense of these things. So take advantage, have a sense of urgency around those. I think that has been fantastic advice. Is there any other worldly wisdom that you would like to leave us with today?
Well, what I like to tell, especially the students, is go with your gut.
Yeah.
And what does that mean? It means listen to your family, listen to your friends, listen to your mentors. But at the end of the day, it's your journey. And figure out if you're trying to make, particularly bigger decisions in life, what does your gut tell you?
Yeah.
And if you go with that, you're not going to have regrets. It may turn out to be wonderful, may not turn out to be the best way you anticipated. But at the end of the day, you went with what your gut tells you, and you're not pointing or thinking about the what ifs or I should have done that. It will really reinforce the decisions and the confidence you have. And look, enjoy the ride. That's the best thing I can say.
Well, I think that's great advice, this regret minimization matrix that Amazon talks about and Jeff Bezos. And your gut usually knows. Steve Jobs mentioned that as well in prior years, and somehow it knows. So that intuition, listen to it. I think that's fantastic advice. I think that's a great place to end on the show. So I want to say thank you, Mr. Wong. Again, thank you for being part of the GW Investment Institute. We're sincerely grateful for all the work that you do for us and the wisdom that you share and the work. and the wealth that you share with us, all very important categories. Thanks for making the connection with Dan Ives' recent episode. That was a ton of fun in the conference as well. But really, thank you for sitting down today and going over your background, your work experience. I think this is super helpful for anybody, but especially for our current students and maybe our alumni. So very much appreciated there. So that'll be a wrap for today. So I want to say thank you for everybody for watching today's show. We look forward to seeing you back on the next episode of Market News with Rodney Lake. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.